Hi, welcome to the Real Estate Market Watch and Mortgage Market Update. I'm Bob Gibbs.
And I'm Michael Caires.
And we're in the middle of March 2023. The year's just marching along.
Yeah, the crack of the bat's already happening in Arizona and Florida.
Can't wait.
Opening day coming up pretty
Can't
quickly.
wait to see where my A's end up. But anyway, we wanted to give you an update on what's going on in the real estate market and the mortgage market. And the real estate market, we're seeing multiple offers again.
Yeah.
It's crazy. In spite of what's going on in the banking society and everything else that's going on around, there's still a lot of buyers out there looking to buy, and inventory is at a very low level. So as a result, multiple offers.
Yeah, I just closed this morning a transaction on a $2.8 million listed home. Multiple offers at first 3 days on the market.
That's incredible.
Yeah.
Considering what the media is portraying as far as our economy goes.
Yep.
So how's it going with the mortgage market?
Oh, I mean, you asked Bob. Turn on the news.
Pray tell.
Contagion.
Yeah.
It's been wild, actually. I mean, it's been all Fed and inflation.
Yeah.
But now it's a run on banks.
You're right.
A lot of people are asking about the Silicon Bank situation. I mean, you or I could not go in there and get a checking or savings account. It was a business bank,
Right.
for startups. I mean, but an important one.
Right.
And they felt like a lot of people felt like if it actually went down, it would set us back our technology, comparing against with other countries, maybe 5 to 10 years in just development. So
Yeah.
the government, obviously, they had to come in and they stepped in and they made everybody whole, which is awesome.
Yeah.
First Republic, it had been rumored last week along with them, but First Republic's a totally different animal. I mean, they're consumer driven, high net worth clients, and they really seek those and incentivize those people with a lot of assets. Well,
Right.
I'm sure a lot of people with assets, because you're only federally insured up to $250,000, and they regularly publish that they want, $500,000. We'll give
Right.
you a great deal here, or $1 million, and they incentivize it. Well, if you're only insured for $250,000,
Yeah.
there's potential for people to actually make a run on the bank and pull it out.
Right.
So, J.P. Morgan and some others stepped in today and helped them out. So that's a good thing. Credit Suisse, many banks in Europe actually helped them out. But yeah, it's still out there. I mean, who's the next one that's going to have issues? I mean, Silicon Valley Bank, for instance, I think there was some mismanagement. There's definitely things there that we'll find out about down the road.
Right.
Along the short of it, our rates improved because of everything that was going on. No doubt about it. I mean, we're anywhere from 1/4 to 3/8% better in rate 1 week later, where a week and a half ago you had Chairman Powell talking about, or hinting to the fact that instead of 1/4, we may actually have to go 1/2, and then maybe that's off the table now at next week's Fed meeting. Maybe they just stick to 1/4.
Well, I think everyone interested, they should get a loan locked here. pretty
Yeah,
soon.
well, yeah, and that's what we did. That
Yeah.
is our job.
Yeah.
I mean, anybody could push paper,
Right.
but it's having that sense of knowing what's going on in the marketplace, and really, we had a sweet spot on Monday morning that lasted 4 hours. So if your loan officer wasn't paying attention, you were busy. I mean, I was texting people, and we were renegotiating locks,
Yeah.
locking in new customers at below rate. I mean, best rates in 2-3 months.
Yeah. Yeah.
So I think that a lot this time around was where it's different, where we lost 200-300 banks in the mortgage meltdown. I think the government, everybody learned from that,
Right.
and that's why the Fed is coming in. They're stepping in and they're taking care of things. You hear our word out there, recession. Like I saw this morning on TV, Target. If it's non-essential, they're not stocking up on non-essentials because they don't want to carry a bunch of things that are more of
Right.
I don't want to call it a luxury item, but more not an everyday thing. And they're stocking up on the everyday things, and then the other things that are more splurging type of items, they're
Yeah.
not, they're getting off their shelves, preparing for the potential for
Right.
a recession. So I think everybody's just a lot better planned now.
Yeah. Yeah. No, we've been down this road before.
Yeah, exactly.
So come back often because we're on top of this. We're here for you guys.
Yeah.
So anything you need with mortgages, give Michael a call. If you're looking at buying or selling homes, give us a call. It's a good time for both actually right now. In fact, for a seller, it's a really good time because there's just not a whole lot of inventory. So reach out to us and we can get you taken care of.
Absolutely.
Good talking. Bye.